What's going on, guys? It's Ryan and
Maya.
welcome. We have a cool video today going specifically over certain topics that you need to know. The only things you really need to know. Once you figure this stuff out, guys, it's simple. So let's get started.
So what are we going to discuss today?
We will discuss candlestick movement, trend line retracements, broken level pullbacks, and channels and pullback zones. So you're going to be able to see how it all is structured. Maya put together a really slick presentation, really slick draw or chart analysis of what to expect on certain pairs and how to draw it out appropriately to go over everything. So let's get to the first part.
All right, so the first part is pretty basic. So I'm going to draw on the screen.
Go to the annotate right there. There you go.
All right, so what we're looking for here is the candlestick movement. Basically, you already know what the candlestick movement is. You've looked at candlesticks before. We're not going over patterns today. This is not a pattern candlestick video because those patterns don't really mean anything, though if you do know them, you can, and the patterns are basic information you can get from anywhere in the market.
Yeah, if you know
you're going to take time on that. So this is basically just so you know how the candlesticks are formed. All right, so right here, we'll start here. Or we can start back here. This candle opened here, pulled down to right there, and then went back up and closed here. And then this candle opened right beside it, went up, came back down, closed here. Opened here, went up, came back down, pulled back up, and closed here. Next candle, opened here, went up, sorry about that, and then back down, closed there. Then this candle, same thing, opened here, went up, then down to there, pulled back, closed here. So you can see the basic of how the candles work. They're usually going to come and open. If it's going to go, all right, so if the candles are going down, we're in a downtrend. If the candles are going down, they're going to open up and they're going to, they'll open up beside it and they'll attempt to go up first.
Yep.
The ones going down, they're going to go up first to do what? Fake your emotions. So they're going to fuck with you first, going the opposite direction. So that when it first opens and you see it start going the opposite direction of where you think it's going to go, be patient because it's going to turn and go the other direction.
They're trying to trap traders. When they throw wicks, those are all trap trades. That's all they're doing.
Yeah. So basically, like I was showing him earlier, this candle right here, it opened above it and it came down right here to test. I wish this would draw more perfect. To test there, but you get it. And then it went back up. Right? Closed, open, came back to test.
These are small pullbacks on tinier time frames. Like, you guys understand the structure. If it's an uptrend, it's got to go down, then up, down, then up, and it's going to keep forming higher highs and higher lows. This is essentially all it's doing is higher highs, higher lows on a smaller time frame. You're seeing it in the wick stuff.
Right. So, like this one right here, this area was tested with this candle. This candle opened here, came down, tested this point right here, and then turned around and did exactly what it was supposed to do, going up. And then same thing here. This candle came down, tested here.
It's always going to test the previous candles, not the very previous one.
Not the one right behind it, but the one behind that.
Just go look for significant.
Or two behind that. Just depends on.
Could be 2 or 3. You just got to, you'll see the zone. It's very clear to see where they're going to be testing, where they have the most trap traders on. Like, because it's not just here, right? It didn't just test this zone right here. It tested this candlestick too. And this whole zone, look, this whole zone right here just consolidated. So it came back. And you can
take that even further back to over there.
Yeah, look. Right there. Look, it tested that zone. where candlesticks have gone prior, but we don't look at that because what we're taught is to look for patterns and what everyone look at the bigger picture.
Look at the distraction, guys. You'll never see what's really in front of your face. That's what they give you in the marketplace. That's what all of the guru traders are taught. Everything and everyone is taught this except the ones that are running the show. The only reason that you're getting this from me is because I sat and let it show me what it did. I didn't learn from a guru. I didn't go to teachers and get them to teach me all the shit that they think it's doing. I spent hours and hours and hours and hours. I've got over 20,000 or over 15,000 hours in the markets at this point.
So would you
just
say,
looking at it.
So would you say that this is one of the first things that they really need to know?
Yeah, absolutely.
Candlestick movement?
Absolutely, because you're getting taught candlesticks. Most people get sent over to the what is it, the candlestick video, that old candlestick video.
Yeah, like that's all the free shit.
Yeah, that's where I started at. I remember getting that video and I was looking at candlesticks and I'm like, okay, patterns, these patterns, those patterns. I was writing it out on paper. I've had my wall covered in patterns before. None of that shit matters. I've thrown everything out the window when it comes to all of that and went back to the basics of what is it actually doing? Regardless of what I'm taught, what is it doing? So right here, just in the blink of a second, I can already tell that there's a trend line. Look, I don't even remember where I got this picture. I just took it earlier. But I can tell that there's a trend line already forming right there.
Yep.
And
there's a channel, actually.
Yeah. There's a channel going. And so it's touched. This was the first point of the buy, and we have a W right there. Yeah. So second leg W entry, and then before it came and touched the top of the channel, it hasn't gave you any indication of the top of the channel yet. It came back down and bounced off of this trend line. Now it's created the trend line. So now there's your second buy entry. And when it comes back up and it touches the top of that channel, now you have your first sell. This would be your take profit, also buy entry.
Yeah. That would probably be the most accurate one, honestly.
Yeah.
Because if they're not able to predict this,
yes,
once the channel's formed.
And what it means is if you're not able to predict all of this movement right here, sorry about all that.
But essentially where the last circle is,
yes,
that would probably be the most probable entry that you would take that for accuracy.
Yes, that's the most accurate one.
Yep. So we are,
because you've already broke levels on the back side here.
Yep, back here. So it's once the levels are broken, you form the new one up here. It's gonna go.
And look, down. This one right here.
It retested the high.
Yeah, you went right where I was at. So this one here retested this point here.
Which carried itself all the way around.
It would be the wick right there. It would, if you were to take that all the way across, it tested that.
You guys see it. It's not perfect, but
yeah.
you get it.
All right.
So the next one. Okay.
Was this the next one or the last one? Oh, yeah.
It's the next one.
Okay. All right. So this one right here, GU monthly. All right. This is one that you can watch play out. I did this because it's not even there yet, and I wanted you to be able to see what I'm looking at. So basically, went to the, no, this is the weekly, not monthly. I went to the weekly, I took the top point, and I figured out where is the trend? What direction is the trend? That's what I want to know first.
So you saw on the first one, where's the price gonna have to move to in order for us to look for the next probable entry?
Yeah.
On a longer time frame.
Right. So I've identified the trend. Now I'm identifying broken levels. So after I drew that line there, I said, okay, where's my broken levels at? 1 broken level, 2 broken levels, and 3 broken levels. All right. It had to pull back. So in that pullback from the last point that it made, the last low from these broken levels, right? It pulled back to there. So I can take a trend line and put it from the last low all the way to the corner where it touched on the trend line. And then after it drops and leaves me another low, I can do the same thing that is equal. Like it literally is aligned in the same direction as the first one, and know that it's made that low it has to reach back and touch the trend line before it can drop past this low again.
This is a simple move, pullback on just like look at a regular downtrend. This is a simple downtrend, guys. You don't have to overcomplicate it. Got the high up here, new low, lower low, lower high, lower low, ding, ding, ding. Just match it up with the trend line. This is essentially what you're looking for. Like, and if it follows the same patterns as this one here, you're doing the same thing. It doesn't always have to be precise.
And if you look, this point here and this point here are literally the same line. I mean, look at the red line that I have drawn across there. It's bounce. It's
right there.
Yeah, it's right there. You have now this zone. It's a triangle, but that's your point. I mean, look at it. It's going to be exactly to that point. So you put your buy limit, or you buy your sell limit a little bit below that so that you can counter in for the spread. But it's really this simple.
Yeah. And mind you, this is the weekly. So by understanding this, what you're able to do now, if you understand this is the weekly, you know that between now and the end of the year, that it has all this movement. So essentially, on a lower time frame, you can look for buys.
Yeah.
You can look for buys to go up to that, but because you know the bigger picture now and you know the structure,
you know when to pull out now,
and you know
to re-enter.
You know where to re-enter, and you can also then take the teachings that we have from the prior videos and the teachings that you guys already know about certain patterns, maybe like M's and head and shoulders, or weekly what is it called? Intraday M's and whatnot. You can literally map out those bigger time frame patterns to then find and execute a precise entry in this zone. So I guarantee by the time price reaches here, you're going to see either a big ass M or a big ass head and shoulders. And that's where you're going to be able to then identify where am I going to be able to ride this out. And I guarantee when it comes down, you can hold this until it gets back down to retest this low.
Yes, you can hold it all the way to that point because it has to touch that low. And then after it touches that low, you're going to want to buy because then it has to go back up and touch the trend line again. So this is where you would know to put your take profit.
One thing you guys need to get into your head is that you don't want to just trade every single day because you feel like making money. And I feel like this is the hardest thing for people to accept because
most give their money back.
Everybody wants to trade every single day. You have people quitting their jobs to become full-time traders. Well, here's the thing. Being a full-time trader doesn't mean you trade every day. Yes. Is it possible? Yes. But does it get exhausting after a while? Yes. You need to just be patient and wait for the perfect setup, because imagine if you had the perfect amount of leverage, you had a big account that one trade would set you up for a year. This would be the trade that sets you up for the whole year. Do you see what, like, get it in your head. Like, the perfect setup is all you need. One trade can set you up. You don't need the little trades and then go off and show your friends how you made all this money to recruit them into a company that doesn't give a fuck about your feelings or anything that you do. You just trade for yourself, wait for the perfect setup.
You think about that when you're recruiting people into companies and all that, your time and energy is all over the place with all these other people that are trying to do the same thing that you're trying to do, which is master something and make money.
Yeah.
And they're looking up to you because you're upline to them or whatever you brought them in the company. You guys are killing yourself. You're running yourself ragged trying to make things happen.
Trying to prove something to someone that doesn't care.
Yeah, we wanted to do this so that you could free yourself from all of that shit. You don't need the companies. You don't need to buy the trainings. You don't need any of that shit. You just need to pay attention to the market and let it show you what it's showing you and act upon what it's showing you and let it call you to it instead of you thinking that you need to be in it every moment, because that's how you always get your money back.
If you watched our interview with Hamilton, guys, this is how he trades. This is similar to how he doesn't trade every day. He waits for the setup. Mm-hmm. And he then acts upon the setup once it's there. He doesn't just say, oh, I got to trade today because I'm $1 billion trader. I have to make money for my clients. No, You wait for the one setup, and he makes his.
He's not touching it.
That's it. Like, you want to get good. Some of you want to be serious. Some of you want to become what is it? Money managers. You want to run a hedge fund. You want to just trade other people's money. Well, guess what? You want to have the easiest time doing that and have a fun time doing that. You look for this shit. Yeah. It makes it a lot easier, less stressful, and you'll make more money.
Look at this in particular right here. I want you to see something because it's really simple. If you would just don't look at what you've been taught about the market, look through the market. So here's a simple thing. You've got this point, you got a little mini trend line going on, right?
Consolidated right in the middle of it.
Right. And then right here, it began to break that trend. It came back up, but it turned back around, right?
Retested the zone.
And then it came back up because it knew that it had to touch this. It's like it has to, look, where it broke the level, same point. It has to touch that trend line before it can fall all the way to break this level. It has to. Now look right here. Here's that point again. Breaking the trend line again. It's going to do the same thing that you saw right here. It's going to come back up, hit here, and then go back down.
It's the pattern, it's the market structure. This is how it all works. So let's move on to the next one. Oh, perfect.
Yeah.
So this is a more in-depth one. You're seeing a channel, you're seeing broken levels, you're seeing the trend lines all being coincided with one.
Yeah. So this is, okay, in the last picture, it was showing the downtrend. So that was the reason that I did the downtrend. Can you go back to that one? Is it? So yeah, just for a second. This is how I mark up a downtrend. This is how I can see it clearly, what I'm looking for, where it's going to go. You can do the same thing on the lower time frames. Just make sure that you are going with the overall trend in what you're doing. Otherwise, you're going to screw yourself.
Trade against the trend.
Yeah. Yes. So this right here is how I mark the uptrend.
And this is current price right now. And this is what you guys will see.
What's going on now. So it's easier for me to mark uptrend this way because I see it differently when it's going up than when it's going down. And most of the times they teach you to look at up and down the same way. Well, there's a difference. Yep. They do it differently. And if you're not looking, you can't see it. You can't tell the difference. So this helps out a lot easier when you're doing the uptrend. So you can already see that the channel has been identified. All right. So the channel. This channel has been identified. All right, so this was the first point. This is your first confirmed buy in the trend. All right. This is your first confirmed trend of the channel.
This is where you know the channel has been created.
Yes. So once that happens and it bounces again, could be your first confirmed sell because you know now that it at least has to go to the trend line. And you know that even though it didn't touch it right here, it still has to come down and touch it. So you could put it maybe just to be safe around that area, right? That could be your take profit from there.
Look for the guaranteed zones.
Yeah, do halfway through it. Halfway through the fucking thing.
It's guaranteed pips.
Yeah, this is guaranteed. And you know that it's going up, so do halfway when you're going down so you can short it and then wait for it to touch the trend line on the bottom and buy again. And then look for these points.
This is the future outlook. Now you know next time it does form a new high, it's not just an uptrend, but you now see the channel and that I should probably look for an overall pattern. M's, head and shoulders, if you know your patterns, and then if you take the candlesticks into consideration and understand how to look at the candlesticks at a very small, at an in-depth view, you can find an even more precise entry within that head and shoulders at the trend line to get even more pips if you really narrow it down.
Yeah, and these points that I was identifying, if price, I've said this to you before, wherever price has touched before, it's going to touch again.
Yep.
So you can see here, price touched here, it bounced off of it here. It's not going to touch it exactly because it's got the trend. The trend line now becomes the thing that it must touch. Even if it's
actually supply and demand zone from that bottom wick is the top of that.
Exactly. That is a supply. So from here to here, all the way across to here, you would see the exact point.
So that low is that high.
Yes. Yep, this low.
Right there is that high.
This high.
Yep.
And wherever price has been, you know that it's got to retest it again.
Yep.
The price points that you're seeing now in the market that it's touching, it's already hit them before. Right. And the low, what was it I said to you earlier? The low of the high is resistance, and the high of the low is support. So, all right, this is a high. This is the low of that high. So that would act as
support.
Yes, support. But we're in a channel. So therefore, in that channel, it's got to go back down and touch the trend line.
Yep.
And then wherever the high is, or the low, that would be the low here.
So when the new low is formed, you'll know that once it reverses from this point, that this where it's currently at is resistance.
If this right here, like this point, that would be the point of resistance.
So once it breaks.
So if it hits that and turns, it's going to go back and touch the trend line. You're waiting on it to touch the trend line and resist it, and then you could buy again. But if it just keeps going, then now it's going to use it as support.
Now, mind you that the initial drawing that we had up here isn't the exact movement. So don't look at it like, oh my God, they just predicted the exact movement. Understand if it were to hit these zones, this is approximately what it would do. So if it hits the trend line down at the bottom, you know that once it hits the trend line, it's got to go back up to that top and hit it again, right? And understand, by us mapping it out like this and having it seen, that this is all algorithms into the Forex market. News doesn't affect this. Things in other countries and problems in other countries, banks don't affect this. They are simply going with the algorithm that is set in place. Yeah, so really think about it. Think how deep about this really is. This is the dollar. You can literally map out the strength and the weakness of the dollar with this concept. And you can literally understand, okay, there's going to be something going on in the economy because I see this going on. This is telling me it's going to drop. Holy shit, we should probably brace ourselves. Or, oh, the market's about to rise. The dollar's about to increase. Maybe I can do some more things with some assets. Like, you can do that because the market has an algorithm. Events don't cause the market to move. The events happen to correspond with what the market's going to do because they know what it's going to do ahead of time.
So they push the events to trap traders and then turn it the exact opposite way of the news.
Yeah, so look at the matrix. Look how it's all controlled.
The emotion. And seeing this, being able to map out what direction the market's going to go for years to come takes all of your emotion out of it. So then you take this and say, hey, you've identified that you're going to place a buy. Let me clear all this. You're going to place a buy here, right? So you're waiting on that.
Yeah.
And you know that the market has to go down to give you that buy, right?
Yep.
So what are you going to do? Go to M15, find your entry, and you're going to sell until you get to that point.
Yeah, right here. Look, this is all selling. Mind you, this is the weekly. So you now know that it has to go back down to retest that trend line. It hasn't touched it yet. It has to go back down. So essentially, you're on the weekly. You know exactly what this price is going to do for the rest of the year. You're waiting for the proper time. You know that the dollar is going to have to drop. Something's going to happen to the dollar.
So timing is everything on this.
Yep.
And so also, right here, I have the buy limit that I was saying, set your buy limit, and then the sell limit here. Now, this sell limit would also be a take profit.
Yep. You buy and sell both ways. You're essentially hedging.
Yes. So you have your pending here.
Yep.
It hits, goes up, gives you a take profit. You get cashed out, and you're re-entering at the same time with a pending here.
So take profits hit and a sell limit hit.
And then sell limit, profit, take profit would be there.
Yep. Simple.
Yeah.
All right.
So.
I think that's it.
Yep. That's all we were going to show for tonight.
Yeah, guys, hopefully that makes sense.
If you have any questions,
please comment in the YouTube video or just comment on the post within the group and we'll answer it. But this is all you need to really be looking for, guys. And this is without indicators. This is without anything trying to perpetuate your emotion.
You're drawing everything yourself.
This
You're
is
drawing the broken levels, you're drawing the channel, drawing the points that it has to go to. Everything is all you.
Yep. So don't overcomplicate it. Keep it simple, and then just be patient. You do that, you win more times than you think. So with that being said, guys, we'll talk to you soon. See you in another video.
Bye, guys.